Hello guys. So we're looking at what happened on NASDAQ last week. It's Monday, and this is Monday's opening. Probably tagging this daily low. We've completely rebalanced that imbalance, but there's this gap that was never rebalanced. There's a potential of trading into that, but I'm not here to predict what might happen. I'm here to show you what happened and detailed explanations, obviously using ICT concepts. Gonna go all the way to, oh wait, I went too far. Monday. Monday 17th June on an hourly time frame. So that's Monday. That was the draw on buy side, that was the draw on sell side, and a minor draw on sell side liquidity. The sell side was taken, the market proceeded to rally up. Obviously the bias is bullish. Then Tuesday and Wednesday there wasn't much happening on the hourly time frame, but we look at that in the 15-minute. And on Thursday, because there's not always a trade every day, don't be convinced it's a trade every day, it's not there. So on Thursday there was the news took up sell side liquidity and rebalanced that imbalance. Obviously there was a target, two targets actually. And on Friday this was a draw on sell side, and this was a draw on buy side, and this is a draw on sell side. I'm also targeting these imbalances to be rebalancing this week, and there was a stop hunt at 9, and the buy side liquidity was targeted later. We'll see it more clearly in lower time frames. Let me go into lower time frames. With that bias, the bias was bullish until Thursday because of the imbalances that were formed on Tuesday and Wednesday. These ones. After this, you'd probably be targeting those to be rebalanced, but I'm expecting a continuation. So it's Monday. As I was saying, this was a drawn by sell liquidity on Monday, sell side. Sell side was taken. We were anticipating a bullish move because the bias is bullish. You don't trade against the bias. If the order block has not been invalidated, then just continue with it until it's invalidated and you have a market structure shift or a market structure change. So the trade went all the way up to 12, all the way to buy side. I'll show you the trade in the 5-minute, it's more clear. Then these imbalances were left, and the trades happened at noon. And by noon, pretty much most of the move was over. That was Monday, and in the afternoon, I would have probably targeted a rebalance of these imbalances. But I took a trade here, and it went well, so I didn't want to participate in the afternoon. And Tuesday, let's go into Tuesday. The buy side liquidity, just annotate that real quick. That was the drawn buy side liquidity. This is the drawn sell side liquidity. Just annotate that real quick. So sell side was taken, buy side was left, and there's this imbalance. It's actually better that I haven't annotated these charts because now you can see it. It tapped there right at 9:30, targeting the sell side. This was obviously the major draw on sell side liquidity. And considering the imbalances left on Monday, there was this minor draw and major draw. So 9 at 8:30 there was no news. 9:30 it traded into that fair value gap, and this would have probably been your target. A short position would look like this. See, the reason I use ICT is because it's the easiest model to follow. Well, your risk would have probably had this candle. I don't like this candle's risk parameters, so I would have just used the swing high as my stop loss, and my target would have been a partial here at 40, and my next target would be the sell side liquidity, and then I'd probably just let it run till 12 on my third partial. It would probably just come against me, but you know, you already paid the trader. This is where your trades are. And going into the afternoon, I didn't see much. I was trading the S&P. I didn't look at the NASDAQ. Wednesday, nothing much happened. So it's just back and forth. No real price movement. And that brings us to Thursday. Opening price is always this price at 8:30 and this price at midnight. So let me just annotate that real quick. Wait, that's supposed to be midnight. And you see all these vertical lines, it's the backtesting I've been doing since I started backtesting in, I think, February. I was watching ICT, the mentorship, on January to February. So I think I finished somewhere around March, because it's a huge mentorship. It happened in 2022. So that's 8:30, the below opening price. At 9:30, some sell side liquidity is taken. Which sell side? Well, this one. All people who have been profitable going up, who have traded their stop loss, thinking it's gonna go up and not rebalance these imbalances that are left on Monday, because that's how the market works. These two things: imbalancing, a rebalance, sell side inefficiency, buy side inefficiency, and targeting liquidity in the form of buy stops or sell stops. So this imbalance was created. See how it rebalance that? Like, you can't make this shit up. Like, if you go back in your charts and look at it, you just see it. I've seen it. That's why I'm telling you, but obviously you're not gonna believe me if you don't go into your charts and look at it. So I think the trade would have been till 12. Oh yeah, this is what I was talking about. I ended in the S&P. See, it went in your bias during lunch, but you don't want to be trading between 12 and 1:30, because it can come back and run into a stop. So you've just taken that trade, and that's just a day you didn't achieve your target, but it was hit anyway. See those imbalances to the left, these ones? It completely rebalanced those and even went lower, all the way low. Isn't that just interesting? All the way. And then in the afternoon till 4, there wasn't much. There wasn't much at 4. And that brings us to Friday. Friday's opening. Let me just annotate the midnight opening candle. You know, for me, I don't even think I see days passing. For me, it's just a countdown. So at 8:30, where's 8:30? I miss my mouse. At 8:30, that was a drawn by sell liquidity. I guess you need me to annotate that. And this swing low, this would have been the sell side liquidity, the minor sell side liquidity. Obviously, higher points, higher highs is where the major liquidity is resting at, which obviously is this level. Screw it. This level and this level. In fact, this is a very good target, because these relative equal low highs all the way there, all the way from Thursday, and there's not a sufficient stop hunt to indicate that they've been taken out. All those market orders and stops are still there. That is for people who haven't taken out their. Okay, I'm talking about buy side. Buy side was left. You see that, and then they took the sell side at 9:30. Now after 9:30 is when you're hunting your setup. When does that happen? You're aiming for the buy side, right? An imbalance is formed at 10:45. It trades into there at 11:30, and opens at 11:15 and you're in. Well, your risk parameters, they're low that high, and if you're really scared, now that's not a good risk. I mean, it's 1-to-1, but if you're really scared of getting stopped out, you probably want to put your stop losses at lower swing highs or lows. And that was the trade for Thursday in the morning, and you'd have got 80 pips in the NASDAQ, and till noon, maybe taking a partial here and let it run till noon. Either way, our main target wasn't obtained, which is this, but my guess is we'll probably take her out sooner or later, considering the bias. And at 4, nothing much, unless you are anticipating a rebalance of this. Maybe. So anyway, Sunday, our markets opened yesterday. Yesterday at 6. See, this rebalance has already been this imbalance has already been rebalanced. My guess is the bias continues. If the bias is invalidated, we'll wait to see what the market wants to do. If there's a shift, if there's confirmation of a market structure shift, then we continue with whatever the bias of the shift is. So I'll be waiting at 8:30 to see what happens, as always left at classes. But my bias for today would be, okay, there's this relative equal lows. That's algorithmic. If you think this is buying and selling pressure, like, or candlesticks patterns, I used to do that stuff in 2022. Man, I wish I found this one. Not validating it though. If that gets taken out, because that's relative equal lows, I'll be aiming for a rebalance of this, the relative equal highs, and a rebalance of that. But we'll see how the market goes. In the 5-minute, it's just probably just the setup I've just shown you right now. But let's have a look at it since I have 3 minutes left. Okay. Monday 8:30. See, it wasn't clear on the S&P, but it was clear on, I mean, it wasn't clear on the NASDAQ, but it was clear on the S&P. But here it is anyway. See that after this swing high was broken, then it trades back into the imbalance. Next thing you're targeting is what? The buy side. This buy side. And it goes all the way up there till noon and then continues upwards at noon. Then noon is 12. And my charts are annotated to New York. I'm using the New York time zone. Set your charts to New York time zone anytime you're using the markets. Don't use your local time. And see, nothing much happened here in the rebalance of the imbalance formed on Monday. I'm trying to make this fast because I only have like 1 minute left. Tuesday, the buy side, the sell side taken, fair value gap traded into another setup, another fair value gap here, traded into, that's a second setup, another fair value gap. There's so many, man. Traded into, those were 3 trades, literally. But remember, your risk have to be at the top of this one, all the way till noon. If someone was perfect, they probably just caught all this. Risk toward 1 to 3, 40 seconds left. Wednesday, I didn't rotate the Wednesday. Thursday, I'm showing you the setups. Those are fair value gaps. You see them, the first one, the second one, the third one. You'll have to watch the ICT mentorship for that, or maybe I'll make a video explaining the fair value gaps. And that was the trade till 12. And sorry guys, but my time is up. See you next video, I guess.